Transformation, transformation, transformation. This is the topic I want to talk today. Hi, welcome back to Tax-Exempt Millionaire Club. I'm your host, Jing. If you haven't joined our community, feel free to join by scanning the QR code. We discuss how we could accumulate tax-exempt wealth, step by step, legally and morally. We all want to be millionaires. How about tax-exempt millionaires in this episode? It's my personal experience. I want to share you this Marvel board. It will be so much easy to talk about the numbers and look at the chart together. Okay, let's talk about asset allocation before and after. This is right around 2021. That's what our asset look like. We have a majority of that in traditional art. That pile of money was never taxed. We have to pay Uncle Sam the tax when we start withdrawing. We have about 35% home equity, which is a huge burden each month. Our primary residence, that's the only property, only asset we had. TI is 4,600 every single month. The mortgages, the miscellaneous household expense, sports, you name it. It's over 10,000 after tax cash we're burning every single month, which is sort of crazy. Let's look at after a couple of years. We actually sold that primary residence. We got equity out. We purchased different properties, rental properties. We also moved in the middle. So we moved from North Carolina to South Carolina. Right now, the South Carolina primary residence is a townhouse. So our burden on PITI is much smaller. In addition, during the last 3-4 years, we have been doing the so-called Roth conversion. Little by little, we try to convert as much as we can in the same tax bracket. So we have been paying a lot of tax back to Uncle Sam for whatever that amount we converted for that tax year. Now we have most self-directed Roth IRA. Using that money, we purchase rental properties, we invest in companies. We're also doing transactional lending using that amount of money. We have a small percentage of self-directed Roth solo 401k. I apologize, this should be solo 401k. It did not mark it correctly. We have another big chunk of rental properties. We use the equity when we pull this primary residence out from the before picture. The current residence, the home equity is much smaller compared to the 35% before. I put some key notes here. As of now, looking at this after picture, we take full control. We have most Roths. You can clearly see we have our own bank. We have our self-directed Roth IRA bank, self-directed solo 401k bank. We actually have a very small self-directed bank, which is our FSA account. It's from the previous employer of my husband. I don't even know this before, but actually you can self-direct those accounts. But a lot of active HSA or FSA accounts, some of the service provider will not allow you to self-direct that. We aim to have basic financial freedom. The basic means all your cash flow after the expenses, the net profit each month will cover your household expenses. Our goal is require more asset and it will bring us more cash flow so we can reach the financial freedom we always desire. In the meantime, we're building up several big chunk of tax-exempt assets using the self-directed strategy as well as the IBC, the high cash value life insurance. So this is all I want to share with you today. What's your financial picture? Is it the picture on the left-hand side or is this the right-hand side? Comment below and let me know. Do you have a plan to shift your asset to the tax exempt? I want to hear your story and your plan. If this information is useful, please like, subscribe, and comment. Like we always say, don't let banks, taxes, or outdated advice limit your wealth. Join our TMC Tax Exempt Millionaire Club today. Own your bank, your wealth, your future, all tax exempt. I'll see you the next episode. Bye.